Hello everyone and welcome back to our channel. Today we're diving into the fascinating world of currency markets, specifically focusing on the Japanese yen. It's been an interesting ride for the yen, which has been holding on to some solid gains lately. So what's driving this strength? Let's break it down. First up, we're seeing a classic case of safe haven demand. In times of global economic uncertainty, investors often flock to assets they consider stable and reliable. Historically, the Japanese yen has been one of those safe harbors, and it seems that old habit is kicking in again. People are looking for security and the yen is providing it. Another huge factor is the constant buzz around potential intervention. The Japanese government has been very vocal about its concerns over a weak yen. They've hinted, and even acted in the past, to prop up their currency. This fear of another surprise intervention is keeping traders on their toes. No one wants to be caught on the wrong side of a massive government-led currency buy-up. So many are hesitant to bet against the yen right now. This is creating a strong support level for the currency. But it's not all one-sided. We also have to consider the Bank of Japan's stance. Governor Kazuo Ueda has mentioned the possibility of further interest rate hikes. This is what we call monetary tightening. Normally, the prospect of higher interest rates would make a currency much more attractive, and it is adding to the yen's current strength. However, Governor Ueda has been quite vague about the timing and the speed of these potential hikes. This lack of a clear roadmap is making some investors a bit cautious. Adding another layer of complexity is Japan's own fiscal situation. The country has a significant amount of government debt, and the recent rise in Japanese government bond yields is making that debt more expensive to manage. This is a serious concern. If the government's financial health is seen as deteriorating, it could undermine confidence in the yen, acting as a brake on its rise. So while the Bank of Japan might want to raise rates, they have to be careful not to worsen the government's debt problems. Finally, let's not forget about what's happening in the United States. Federal Reserve officials have been making some hawkish comments. Hawkish means they're leaning towards keeping interest rates high to fight inflation. Higher U.S. interest rates make the U.S. dollar more attractive to investors. This could limit how much the dollar falls against the yen and might even provide some support for the USD JPY pair, preventing the yen from strengthening too dramatically. So to sum it up, the yen is caught in a tug of war. On one side, you have safe haven demand and intervention fears pulling it up. On the other, you have concerns about Japan's fiscal health and a potentially strong US dollar pulling it down. It's a delicate balance, and it's going to be fascinating to see which forces win out in the coming weeks. Thanks for tuning in. If you found this analysis helpful, please give this video a like and subscribe to our channel for more updates on the global markets. See you next time.